Hi, in this video, we're going to work together and input numbers and data in a financial model for a company. One of the most common questions I get is where do we kind of get data for building a financial model? And my answer to that usually is that we look at the annual report and we put the data in manually. So stay with me till the end and open an Excel file. We will work together and put data for a company, Avenue Supermarts, for the last 3 years in an Excel file, right? I get this question, why manually? Well, when you're starting your career, the idea is to kind of also register the numbers when you're inputting that in. So when you punch those numbers in manually, then it registers a little bit better. You'll know what the sales number is, you'll know what the debt number is, you'll know what the receivables number is, and so on and so forth. So I usually recommend that we do it manually. The cons of this process is that it is a little bit slow and tedious sometimes, but that's an initial assessment. Usually when you do it for 2 or 3 companies, the 4th company is much faster in nature. There's also a possibility you might end up making some errors, but because you're inputting data and checking it right away, that's okay. It can be checked and it's a solvable problem, right? So stay with me. We will work on this and we'll try and put data for this company from its annual reports as we go along, right? My name is Peeyush and I'll be using both Hindi and English in this video, but predominantly English. And wherever I use Hindi, it's just to drive home the point. The same point would have been spoken in English as well, right? Let's go to a website screener, right? And on this, I'm going to search for this company, Avenue Supermarts, which is parent company of DMart, runs the stores by the name of DMart. We are going to go and look at the documents. And in the documents, we're going to find the annual report. One nuance that we need to understand is that when we are looking at these reports, you want to go from the latest report backwards. So latest financial report is available for FY24 annual report. So we'll look at FY24 report and use the data for FY24 and FY23 from this report. Then go 1 year back and use the data for FY22 from the previous report, right? Because 23 we would have already put in from the latest report, right? So that's the process we are going to use. The logic of that is sometimes companies restate previous year data in this year. And so we want to use the latest data that is available with us, right? So we'll open the annual report. I have an Excel file with me where I have some headers punched in. You can start with a raw Excel file as well. I'll show you that process as well. So let's assume there is an Excel file which is like completely raw like this, and we are looking at trying to put in data from the annual report. For the purpose of this exercise, I'm going to use standalone data because in this business, standalone works. But you can use consolidated, just use like for like, right? So let's go and find where the standalone balance sheet is, page number 124. So I'm going to punch 124 and there or thereabouts. Yeah. So here we have the data, right? Now, if you don't have headers in a file, what you can do is you can copy this, Control C, go to the Excel and home, paste, special as text, and you'll get this data like this. Obviously, everything is kind of put together. So what we'll do is we'll go to the data tab. On the data tab, we'll go to text to columns. And in text to columns, we'll look at fixed width. And I'll put the width. I can put column details here. So I'll put one here, right? And click on next and finish. Now you'll note that most of the headers are available in this column. There's obviously a bunch of numbers. I can, if I want to remove these numbers, it'll take some time, but I can do that, right? Any which ways, it's a one-time process because the headers typically remain the same for all the companies. Services, all companies will be similar, and manufacturing, almost all companies will be similar. Minor 1 or 2 headers might be here, different here or there. But ballpark, you could basically just look at deleting all of this and you have all these headers which are available. I already have this data here. So we can look at this and start working with this as we go along, right? What we should do is we'll just probably put them side by side. So I'm going to put the Excel file here and I'm going to put the annual report pulled in till here so that we can work together. And the idea is, while this appears like a slightly tedious process, we'll realize that it won't take us more than probably 30 minutes or so to get a reasonable headway in terms of 2 to 3 years of data for a company, right? Now, one more thing you want to keep in mind is that when you're putting numbers in Excel, your latest data in the rightmost column. But when you're looking at the balance sheet data, which is on as reported annual report data points, the latest data is in the left column, right? Is on the left side, essentially. 23 is on the right and 24 is on the left. So just be careful. Usually use 1 year at a time and work with that as we go along, right? So let's punch in the data. I will round it off to the latest, to the nearest sort of whole number. And I won't be using decimals here. If you want, you can. That just adds a layer, but over a large balance sheet size, it wouldn't matter. All the numbers are in INR crore. I'll stick to that. So 11522 is my number here. 930. Capital work in progress. Right of use assets 1395. Investment properties is 75. Intangible assets is 17. Right. Investments is 964. Other financial assets is 225. Income tax assets or current tax assets is 16 and 361. That gives me the sum of all of these as total non-current assets, right? I can go one column on the right side and quickly put the data for 2023. So that's 9464, 829, 1283, 79, 10, 775, 101, 15, and 350. You might have a minor rounding error here or there because we have kind of zeroed down and, sort of rounded off the numbers to the nearest whole number, but that's okay. Again, as I said, on a larger balance sheet, it wouldn't really matter as much. So that's okay. We go down, we quickly put the numbers for this year on the inventories number. So that's 3723. This is now the current assets. Investments is 107. We see trade receivables at 393, right? So we see 393. We see 259 as cash. Bank balance is 301. There's nothing in loans. The header exists there, but that's okay. Maybe in some of the earlier years, there was a header there. We see other financial assets, and that is 1124. Other current assets is 153. There's no current tax asset. I'll do a sum of all of these, and that gives me the current assets, right? And total assets will be current assets plus non-current assets. So that gives me the total assets number. Let's embolden this as well. Same for last year. I'll put in data very quickly for the last year, and that's 3056, 202, 246, 247 rather, 187, 1186. Yeah, so instead of 301, we see 1186, 1124, we see 318, and 142. I can copy both of these and paste them here, so we get the overall balance sheet assets done, right? And fairly quickly. Zyada samay nahi laga, we didn't take too much time, right? And assets are done. Let's go to liabilities very quickly. And equity share capital, you'll see, is 651. And other equity is 18629, actually 630. The sum of these two is data given here, 648, 15854, and Control C, Control V. That's done as well. So equity capital is also available with us. We go further down very quickly. Non-current liabilities. I'm going to look at non-current liabilities. Let's look at data from here. Financial liabilities. There's nothing in borrowings. There's a lease liability that we see. So only lease liability comes here straight away. That's 315. And then there is some other non-current financial liabilities. That's 0.37. I'll round it off to 0. Deferred tax liabilities, that's 94. And the sum of all of these, just kind of collate all of them together, just in case there is a number that comes for borrowing in the earlier years. We just sort of include that in our formula, right? And then I will look at details about lease liability for the last year. So that's 329. Corresponding to that, we have 0. It's about half, but that's okay. And 79. So Control C, Control V. Yeah, so that comes here. I have total equity done. We can actually remove this header here, not needed, unless there is a minority interest component that comes. That header can go away. Then we go to current liabilities in financial terms. Let's quickly look at these. Latest year, once again, no borrowings. Lease liability is 149. Then we see trade payables. Now, trade payables are in two components, remember. There is, if you look at this carefully, trade payables are because of micro and small enterprises, and other than micro and small enterprises, to 207 and 744. I can choose to club them together. If you want, you can put two separate rows as well. And so, we could put it there in that sense. I am clubbing that 208 plus 745. Yeah. Rounding them off again. Then we have other current financial liabilities. Yeah, that's the number. So that's 378 rather. We punch that in. Other current liabilities is 87. So we put that. Provisions is 55 and current tax liabilities is 254. Yeah. And the sum of all of these, in fact, I should expand this to include borrowings just in case the company chooses to have borrowings tomorrow. We have that as well. Let's put the number for the previous year, 110. I have 67. Let's actually just put it that way, 634. Acha, nahi, I have to add these two here. 67 plus 634. So that gives me this number here. Then we have 273, 117, 46, 85. And that gives me this data. Total equity and liabilities is current liabilities plus non-current liabilities plus equity. And ideally, the balance sheet should balance. You see that 1 or -2, that's a rounding error. You can quickly check, where the numbers are not matching or matching. Maybe because, there's a 0.41, 0.34, all of these are rounded off to the lower number. So tends to sometimes do this. For example, I see this is 1332 here, and that's 1333 here effectively, right? So you could probably just increase one of them by 1, so that becomes 47. Similarly, 408, 16502, but then these two are both 0.26 and 0.27, and both of them have been rounded to things. So consequently, that has happened. Maybe I just change this to 649, and that sort of matches this. Ditto for this year. Maybe just change one number here or there, just check and, see which one is not sort of adding up. This is 22,566. So this is correct. This is 565. So on this front, maybe one of the numbers, because again, remember what's happening is 0.3 and 0.3, both are going to get, sort of rounded off to 0. And when you add them together, it should get rounded off to one higher number, right? So that's basically what's happening. So it's okay. You can leave this here as well. That's absolutely fine. It's not such a big issue. There's a small rounding off error of 1 here or there. So 2 years, balance sheet done. Yeah, pretty quick, pretty fast. Let's go to the P&L. So I'm going to P&L. This is even faster, lesser number of headers. So revenue from operations is 49,533. Other income is 189. Sum of these two is total income. On the expenses side, we see purchase of stock in trade. That's 43215. Changes in inventory is -668. That we see there. Employee benefit expense is 786. Yeah. Finance cost is 44. Amortization depreciation 633. 2101. Right? And the sum of all of these is basically my total expenses, right? I seem to have made an error somewhere. This is 668, 43215 rather than 125. So this is the challenge sometimes, but you can check the numbers and quickly review. And when we checked, we got these data points. Let's also very quickly format all of them. So we go to that and we do this and remove the decimals. Done. So this is formatted as well. Let's see if there is any exceptional item. There's nothing. So profit before exceptional items is total income minus this. Achha, I have made a mistake here in terms of adding. This has added the year as well. What a silly mistake. Let's remove this. So 49722 and yeah, 3611. We get there. No exceptional items. Tax expenses. Let's put current tax 901. 15. 16 rather, some adjustment from earlier year, that's 0. And so total tax is the sum of all of these, right? If there's an adjustment, we'll remove and subtract to get to the final net profit. That's 2694. Done for the year. Yeah, that's my sales number. For the previous year, 41833. What's the number? Let's check this. Yes, 163. Copy, paste. Purchase of stock in trade is 36,244 minus 469. Employee benefit is 648, 48, 543, 1750. Yeah. Total expenses done. This is done. 3232. Taxes 800. 14, and there's a prior period adjustment of minus 139. So that changes the tax number to 675, profit number to 2557, more or less there, ballpark. Done. 2 years. P&L is also done. If you want, you can pause this video at any point of time and then basically, just try and go back and put these numbers in for your end as well. But ballpark, not a very quick, difficult sort of not a very difficult process, fairly quick. We've done 2 years of data for 2023 and 2024. We can go back, check this from Avenue Supermart's details, go to the annual report for the previous year now, 2023 annual report. And we'll go into this, we'll check where do we find the details. Once again, page number 114 is what it says. So we check this data here. Now what we can also do is we can actually check what is the number for FY23 and see if there's any sort of a restatement that has happened there, right? So I'll go to the balance sheet quickly once again, and we put in data for the previous year. So this is 7577. Check, this is 9464, that adds up, 829, that adds up, 1073 instead of this, 1283, and so actually 1284, I think, and we put as 1283, and then we have 1146, okay, 7996, we see 10 and 10, 775, 532, 1259, 1 instead of 15, and 350 is 359. That's my non-current assets. Current assets inventory 3056, corresponding to that 2587. Receivables, investments nothing, 0. Trade receivables 247231 the previous year. 187 gives me 83. 1186 is 201. Corresponding data is what I'm seeing. 318 corresponding to that is 107. And 142, same as last year. Copy, paste. Previous year annual report, asset side done. Liabilities. Very quickly, 648, 13276. So that gets this done. Yeah. Go back. No debt last year as well. 320, 0.41 is 0. 65 is not here, it's here. Control C, Control V, go down, and we're going to look at these numbers now. 110 was the number for the previous year. Instead of that, we have 96, and this was 67 plus 634. Yeah. So we're going to do equals to 29 plus 502. 270, 52, 33, 111. That basically gives me the overall size. Once again, minor error, that's okay. You can check the numbers, maybe just add a 1 somewhere, because all of these are like, again, 0.3, 0.4, and we're all rounding them down. Look at these numbers here, right? So you see 0.35, 0.39, 0.29, 0.42, all of these are getting rounded down. One of them we can just round up and, we get to that state. Balance sheet done. Yeah. So that's done for the previous year. P&L, very quickly, I'm going to put in the numbers 30352, 141. That's my sales number. I'll put purchase in trade for 26472 minus 420, 548. Employee expenses 40, 421, 1250. Yeah, put this here, put this here. Any exceptional items? Nothing. Go down to the taxation number. We see 540. We see 13. We see 13. And that gives me 1616. Done. We're done with the P&L and the balance sheet for the last 3 years. Punched in all the data manually. And it took us about 15 minutes to do that. Right. And that's what I was saying, that, maybe because of practice, I would have done it a little bit faster. But that's the whole point. You do it for 3 or 4 companies and it is done. Now you could go to the cash flows, and usually, as you're beginning, you don't need to put in all the data points around the cash flows. If you want to do that, you can do that. I will just put in CFO, CFI, and CFF and total cash flow. So maybe just put in these 3 numbers, and, what you can do is 2022, 2023, 2024 is there. And I can go and quickly check the 2024 cash flow statements, right? And net cash from operating activities is 2743, 2678. So I'm going to go and put this here, 2743, 2678. Net cash from investing activities is negative. That's because they're doing capex, minus 2584. And you look at minus 2442. They buy their stores, remember. So all of this is capex that is happening. And cash used in financing activities, they don't really do too much of borrowing or giving dividends and all. So we see 87 is negative, minus 87, and minus 132. Basically, sum of these 3 is the total cash, right? Because negative anyway says outflow. So some of these 3 will give me the total cash. So if I do this, 72 for this year, Control C, 104 for the previous year, just go down the line item for previous year. We see 1315. We see minus 1292. And we see minus 121. Those are my cash flow numbers. Almost all of the capex is being funded by their cash flow from operations. That's one thing that we see. Profit and loss, we will see sales is about 49-50,000 crore approximately previous year. That's grown reasonably well. Profit margins remain similar-ish. On the balance sheet, the predominant size, because we've put in numbers ourselves with our hands, you'll see plant, property, equipment looks like the largest number. Inventory is large, but that's basically what retail business is about. On the liabilities side, bulk of it is equity. Out of the balance sheet size of 21,000 crore, 19,000 crore is just equity, right? So company doesn't take too much debt, doesn't have too many other liabilities either, right? So predominantly sort of a trading business, buy goods, sell goods. Even on the P&L, you'll see the biggest cost is raw material cost or purchase of stock in trade, because you're buying somebody else's product and then selling it out, right? So that's your set of data that is there that you wanted to kind of have and look at this. Now, what we can also do is do one more activity here, which is you can add business drivers as well. So you can create a sheet called assumption sheet or driver sheet and go here, and you will note that there are some PPTs available here. So I can actually go to their last year end PPT. So that's May 2024 PPT. And I can just put in a few headers here, like, number of stores, area in square feet, right? Or in million square feet. So I can say just area, right? And look at what other data are they giving here. So if I look at this presentation here, they've given me number of stores, for example. So I can say, okay, end of the year, 365 stores, 324 stores, 284 stores. That's the number given here on the top of this table, right? I can go down further. I can look at more data. They're talking about bills cut, right? So I can say total bills cut, number of transactions that have happened. This is in crores, right? So I can write here crores in this column, right? And this is number of stores. Area will be in million square feet. We'll put that, but bills cut is available. So 30.3, 25.8, 18.1. Is there area available? Area is available here. 15.1 million square feet, right? Left bottom corner table, 15.1 million square feet, 13.4, 11.5. So you could add more data that the company is giving in case the company is giving this. If you're looking at a cement company, you can look at production data or sales volume data. If you're looking at an auto company, you can look at sales volume data of how many bikes or how many cars they've sold and punch that data in. If you're looking at a hospital, you can look at number of operating beds that the hospital has. If you're looking at a hotel, you can look at number of rooms that the hotel has. If you're looking at IT company, look at number of employees that the company has. If you're looking at a bank, you can look at number of branches that the bank has and put that data here so that then you can relate that data to whatever financial data you have, right? So that is it. That basically is the entire process. हमें बहुत ज़्यादा समय नहीं लगा. It was a quick exercise in which we basically kind of put in all the numbers very quickly in the financial statements in the Excel file. And it hasn't even taken us half an hour to kind of finish this off with the entire activity and discussions that we had. So my suggestion would be pick up a file, try and do this again at your end. Do this activity for 2 or 3 companies and it'll become familiar. You'll find you'll get faster with this. Once you've reached this stage, the next stage is now then going to try and build the valuation model or financial model of the company, make projections, make the 3-statement financial model, try and understand how the business is valued. That's a separate step. We will look at that in another session at some other time. For this is what the video is. Do try this out at your end and see what your experience has been with this. Please do leave your feedback in the comment section. Thank you.